Nifty.
Hello and welcome to Closing Bell. That was the day so far. I'm Nigel D'Souza and joining me is Mangalam Malu. Hey Mangalam, what a day of trade it is, right? Monday morning, you start off well in the green and you hold on to those gains. Right. So I would read that rather positively. The good point, Mangalam, is the bulls, they've broken their jinx because the last few days we open gap up and from there we just see, a bit of a downtake, and all through this session we do nothing till it's around 3 p.m. odd. Today we are trading at the upper end of the band, so I like that. The HDFC group, well, they are in top form. HDFC, which is not part of the Nifty Bank, HDFC Bank, which is part of the Nifty Bank, though the Nifty Bank is underperforming, the largest constituent in there is doing pretty well. And HDFC Life as well, all of them are doing pretty well. And it's good news when the HDFC group does well. The tide may not lift all boats, though, in the banking space. And that's the sense you're getting, as is evident with the reaction you're seeing on Bandhan Bank. Everyone's talking about growth, credit costs coming down. That isn't the case. In fact, Bandhan Bank, the credit costs, they've revised upwards. The growth they're sticking to, but NIM still, the street is a little bit sticky out there, and that's why you're seeing the outsized reaction on Bandhan Bank. And domestic-facing themes like cement, well, they continue to do well. Ultratech Cement is up and about in trade today, and most of the cement counters are doing well. Maybe post-festive season, post-monsoon, expecting demand to come back as well. Mangalam, I'm looking at the options data very closely, and call writers, they were banking on the 17,850, 17,900 level holding out. The 17,800 call actually has seen a lot of unwinding today. Then there is fresh writing being seen at around the 17,900 put as well as the 18,000 put. So it gives us a sense that the bulls want to go home today with good gains. Let's see whether or not that happens. We got close to around 60 minutes of trade left. And then I guess, Mangalam, battle it out for a couple of days and hope the Fed delivers. That is the dovish, fine print or dovish commentary that the street is waiting for comes about. And then we start making our way to the fresh all-time highs. That's the way I'm reading it.
That's correct. Nigel, the way the short covering has been taking place in the 17,800 call. The important part, however, is that not only have we broken past the jinx, we've sustained above that. The third, straight session after we've, taken a bit of a resistance out there. We come back and we do better than that. And throughout today's trading session, there weren't any dips. The important part, however, is that while that was a resistance on the way up, does that become an important support on the way down? That is something we'll be monitoring, because if that happens, then the support has, in a span of 20 days, moved higher from 16,700, 16,800 to all the way up to 17,700 and 17,800. And where does the market go from here? If the mid-cap index is something to look at, then that's telling you that maybe the street believes this is likely to sustain. Because up until now, the Nifty was doing well. It was the mid-cap index which was underperforming. In today's trading session as well, for most part of the session, the mid-cap index was either in step with the Nifty or perhaps mildly underperforming the frontline index. But now, as we speak, with the Nifty sustaining around 17,972, we have the mid-cap index at an index level which has gone up and is outperforming the frontline index. You spoke about a lot of the cement stocks as the post-festive season. Maybe the street believes that there could be demand for cement, etc. I'm looking at a couple of these stocks which are perhaps doing well on account of demand in the festive season itself, and that's urban consumption. You look at Trent, up 5% in today's trading session. AB Fashion and Retail, that's telling you that maybe these guys had a good festive season. But all that and more, we'll just watch out for in the next 60 odd minutes. Let's tell you what's lined up on the show today. It's a good day of trade with all key indices maintaining a firm stance in the green. The Nifty within kissing distance of that 18,000 mark. We have autos and IT stocks leading the charge.
Nifty Majors, Tata Steel and L&T, they're all set to report their second quarter numbers post-markets today. We'll tell you what to expect later on the show.
What's aiding the surge in Nykaa today? Key triggers and the road ahead for the company coming up in just a bit.
Pashupati Advani of Global Foray will be joining us to decode the market moves and the road ahead for equities, as well as how's he reading the macro picture. Well, how do you position yourself in the final hour of trade? Let's get in Mitesh Thakkar to tell us exactly that. Hi, Mitesh. Good afternoon. Well, a good session, right? Last few days at around 2:30 p.m. when we touch base, the Nifty is normally off the day's high. Today, we're trading at the upper end of the band, and I would read that positively. What's your view on a closing basis? Where would you like the Nifty to close to maintain that positive bias? And where would your stop loss come in at now, Mitesh?
Yeah. So, Nigel, I think, the good thing is that we had a gap up opening and then there was no supply pressure. So the open is as good as the low for the day, just 0.2% kind of 0.2 points kind of a difference. So I think we've had an uptrending day. Now the other thing is that if you look at all the weekly tops for the last 1.5 years, actually about a year and 2 months, I think we have had the trend line joining all the tops coming in around this 18,070, 18,100 mark. So I think if not today, in the next few days, I would definitely welcome a close above 18,100. I think that should confirm that we will possibly make a very serious and a strong attempt to test the all-time highs, get towards 18,500, 600 zones, and then maybe beyond that. But otherwise, I think the gap up today, if that is not filled, then I think till then, I think we'll maintain a positive bias, which means that Friday's high of 17,838, 840 becomes your trading stop loss for any kind of positional trades. Till that is taken off, trade with long bias. The calls that I have right now are buy on Larsen and Toubro with a stop at about 1995 for targets of 2100, and the other one is Ultratech Cement. That's a buy as well with a stop below 6650 for targets of around 6900.
Right, Mitesh, just wanted to your view on the way large weights on the index are handing the baton to each other while keeping the index afloat. This morning we had Reliance, which was doing extremely well for most part of the day. We had L&T as well pitching in, but now it's the last hour of trade. Both those have moved off highs, and we have HDFC Bank and HDFC Limited doing well. So there has been a swift, smooth passing of the baton between Nifty leaders. How do you view that chartically? Mitesh?
See, I think this rotation will keep on coming. My sense is that I think as markets move up, we saw the initial part of the rally was led by the Bank Nifty, and then we saw a high of around 41,530 on the Bank Nifty. Today, I think after 3 days we are slightly below that, while the Nifty is actually moved up and it is on a 15-day kind of a high. So I think this rotation will keep on happening. We had some participation happening from the Nifty IT in between, and then that's kind of compensating for the underperformance of the bank. So I think that's not a worry. That's in fact a very positive thing that the rally is slightly widespread. Of course, on a 7-day basis, something will outperform, something will underperform. But I think to me, it's a very positive sign. And I think, that is actually preparing me for that breakout beyond 18,100, which should at least make us retest the earlier highs of 18,672 on the intraday basis, but 18,550, 560 on the closing basis.
All right, take that point. We'll keep coming back to you through the course of the show. Let's welcome Deepak Shenoy, who's the founder of Capital Mind, joining us now. Thanks a lot, Deepak, for joining in. Season's greetings to you as well. Don't think we spoke during Diwali, but we were talking about some of these index large caps doing extremely well. Reliance is one of them. You've liked this in the past, and it's outperformed over the last few trading sessions. Your thoughts on the stock from here?
Hi, and firstly, thanks so much, and wish you all a very happy Diwali as well. So I think Reliance, we've been bullish on it for a long time. The idea here has been the concept of the demerged entity between Reliance Jio, the telecom, subsidiary in a way, and the retail subsidiary and the oil and chemical business. Plus, they have a bunch of others as well. So there is, if you demerge them all, if you take them all individually, I think they will be valued more than Reliance is currently at the top. So that was the original thesis, and still continues to remain, because when one business is weak, the others seem to be able to pitch in. Interestingly, right now, they've demerged a financial services company. And I think that makes sense, because once you create a financial services entity inside of a large entity, operating entity like this, then all your debt equity ratios can get skewed, because effectively raw material for a financial company is debt. And then your debt equity ratios at a consolidated level get complicated if you're doing financial services separately. So that's a good development, but I'm still waiting for the larger demerger here. And I think Reliance is very, very interestingly positioned, given where it is right now, and given how much more focus India is taking towards building, less of a dependence on crude oil going forward, improving the domestic economy, promoting domestic players rather than imports to help fuel India's consumption economy. I think they've kind of shifted gears from being a traditional B2B kind of player in the oil and gas space to a player that's more B2C now. And that's what's, I think, driving a lot of the transformation. Lots of other issues, of course. There is, what's going to happen at the top, and a lot of the other things are still unknown, and that's why I think the price is also relatively low compared to what it should be. So I'm still very bullish on it. As a disclosure, we own it. It's one of our largest positions.
All right. Hi, Deepak. Deepak, I wanted to ask you. You briefly spoke about that very small part of their business that they've demerged, the financial services business. I'm just looking at Bajaj Finance. In this month itself, the stock is a little bit lower, while the Nifty is up close to around 4% or thereabouts month to date. Do you think that it's playing on the minds of some investors that suddenly you'll have another listed entity? It's very, very small in the scheme of things, but I mean, this Bajaj Finance has trades at around 8 times price to book and the likes. Always been elevated. Any view on this, or do you think it's too soon to call?
So it's interesting because the book value of this Jio Financial Services Limited will have actually 6% of Reliance shares, which were treasury shares earlier, which will be demerged and put into this entity. 6% of Reliance is 1 lakh crores. So if you look at that, that's the book value of this new entity. If it is considered as part of book value, it is a 1 lakh crore book right from the beginning. Of course, they don't have any lending yet, so not any meaningful amount of lending yet. So, but they get a huge view to expand their lending without having to raise capital, which may change the way people look at the economics going forward. But I think Bajaj Finance is a fantastic franchise, and I don't think we should compare, right now, something coming from the Reliance table, which has not really gone into the financing scene of things in any major way till now, to a well-established, flywheel like Bajaj Finance, which would obviously have a huge amount of, penetration, distribution, presence, way beyond what anything else, way beyond what Reliance has. However, Reliance does have captive models here. So I would hesitate to make a comparison. You should price, something like Reliance, the Jio Financial Services at 8 times book or not. But even at 1 time book, if the book value actually contains the Reliance shares that they hold, that would still be a 1 lakh crore kind of market cap, which is quite significant. So I don't know. I don't think Bajaj Finance is facing that heat. Bajaj Finance's commentary was actually a little bit negative, and honestly, we have some of that as well. So I would say, own both in the longer term.
Okay, fair take, Deepak, then. But let's talk about these new age companies, right? Because in the month of November, there could be some supply. No, sorry, not some. There could be a lot of potential supply that hits the markets, and Nykaa would be one of the stocks that will be in focus. So, Mangalam, you tell us first, how are things stacking up? Nykaa has got smacked in the last few days. Today, it's up close to 10%. They've postponed that bonus, right? The effective date out there. But tell us more.
Well, that is the reason why the stock is higher today, is what my understanding is, and that's primarily because they've gone ahead and moved the record date for the bonus from earlier November 3, which was day after tomorrow, to November 11th. It's a 1:5 bonus that the company had announced, so that is something that we know already. What is it that happens once this is postponed? Well, around the bonus, when every time a company issues the bonus, there is the factor of bonus stripping, which on after the X date, a lot of people go ahead, the ones who had bought it for the bonus will go ahead and sell. So that would have been increased supply for the stock, and over and above the supply that was expected already on November 8th and 9th as the lock-in for pre-IPO shares open. So with this bonus being postponed to, record date being postponed to November 11th, at least that bit of supply overhang is taken care of. And secondly, they have their second quarter numbers as well tomorrow. But importantly, it could also be a case of just bottom fishing, primarily because, second quarter aside, the third quarter numbers are likely to be good. There will be festive season, festive buying, etc. So this month, the stock is down 19%. This year is down 51%. From its highs, it's down 60%. So after this sort of correction, are some investors taking a bet on the company going forward? The ones who perhaps did not get it at IPO and are now looking at it with a price which is sub the IPO, and in that interim, the company's earnings have grown. I mean, it's a profit-making company, right?
Yes.
So maybe if that's the call that they're taking, and over and above that, there is the worry of additional supply taken away by about 7 or 8 days.
Okay, all right, Mangalam, fair analysis on that one. Deepak, coming across to you, what's your take? If you like something at a far higher price and it could be a potentially better place in comparison to some of its peers, at least that's what the market believes, Now, if you want supply, you could potentially get plenty of supply. Will you be spoiled for choice, or do you believe that you rather look at other opportunities than looking at Nykaa at around 1,050 to around 1,100?
So I know I kind of talked about it. I think the supply issues, the supply overhang on Nykaa continues because they have a bunch of venture capital companies as investors. Some of these companies are mandated to return exit proceeds to their client, and exits are defined as IPOs. So they were locked in for a year since last November. So when the exit window comes in, they will probably want to make deals to kind of sell these shares. Some of these deals may have already been made because that may have been the reason why the price fell last year, because there were people who have made those deals saying, I will sell it on that date, and they sold it in advance, or however the structure goes. That might have been the reason why, and I believe at least that's the reason why the stock fell in the nearly this last month or so. But one quick note here is that the bonus stripping thing may not apply anymore, because in this last budget, the finance minister changed the rules of bonus stripping on stocks to say that if you buy and sell within 9 months of the record date, I mean, this could be the window needs to be 9 months, then the bonus stripping losses are cancelled. So now if anybody buys for bonus, they have to hold it for another 9 months before they sell and take advantage of the, effectively the bonus stripping, which negates the possibility for most people to actually do bonus stripping, at least in Nykaa, because people do it for the same financial year. They don't wait for they don't want the losses to be booked in the next financial year. So I don't think that's the case. But yeah, I mean, Nykaa, I think, is an interesting play. I would wait for the supply overhang and all of these issues to get sorted, wait for the results, let them show some, I mean, there were some operational performance issues also last time. I think let's see if this festive season has been much better for them.
So what, in your understanding or experience in the stock markets for so many years, makes you believe that the company would have perhaps postponed the record date? I mean, could it be procedural, or I don't remember this happening in the recent past, at least.
Yeah, it's strange. I mean, there are hundreds of reasons why, sometimes it's sometimes as innocuous a reason as somebody forgot to inform somebody else, and then they're like, oh, it's too late, and it could be just that. So speculating on it, I don't know if what the reason is, but I don't think it's sinister.
Right.
I don't think it is to because moving from 3rd to 11th is almost like saying I give you food tomorrow instead of today. It doesn't
but between today and tomorrow, there would be a lot of events, right? What if you have to run a marathon between tomorrow and today? And that is what we're talking about, because between the 3rd and the 11th, there would be that anchor lock-in which would open. But be that as it may, we will continue to speculate on this. And after they've reported their numbers, we'll perhaps ask the same question to the management as well for some more clarity. But hang in there. We have some news coming for you from the insurance space, because sources tell CNBC-TV18 that the insurance regulator has asked the SEBI to investigate violations around the fair market value, and this is with regards to the Axis Bank Max Life transaction. Yash Jain joins in with all the details. Yash, what does this mean? Who is this positive for?
So, Mangalam, so far it was only the insurance regulator that was actually investigating the Axis Bank Max Life transaction. There were penalties which were also imposed on the two companies, but it seems like market regulator may soon essentially start examining this transaction. That's because what we've been given to understand from our sources is that the insurance regulator has written to the market regulator, that is the SEBI, to look into this particular transaction, that is Axis Bank and Max Life. And what is that particular thing which SEBI has been asked to look into is the concept of fair market value when it comes to the transaction which happened in Max Life Insurance, under which Axis Bank bought about 13% stake. They are yet to acquire another 7% stake in the company. Essentially, what IRDAI has asked is that since there is so much discrepancy in the price per share in the last 10 transactions in Max Life, why is it that in just 15 days, the price per share of the company fell from 166 rupees a share to 32 rupees a share, the shares which are allotted to Axis Bank? What has been asked from SEBI is the nature of this discrepancy in valuation, and how did it really benefit, and what was the exact nature of benefit to whichever of the parties if it benefited that particular drop in valuation. We've written to both regulators, that is the insurance regulator, IRDAI and SEBI, but we are yet to receive a reply from either of them.
We take that point, Yash. Thanks a lot for that. Meanwhile, just keep an eye out on the bottom of your screen, the flashes. There are some lines coming in from the conference call of BEL. They've increased the lower end of their margin guided band. In fact, from 21 to 23%, they're more confident that they'll probably be anywhere between 22 to 23% as well. They are set to achieve 15% revenue growth in FY23. And that implies that the second half will be better than the first half of this year. They've also received almost $1 billion worth orders coming in, or letter of intent coming in for a battery pack. Deepak, your thoughts on a couple of these PSUs, defense PSUs, rail PSUs? BEL has been a big mover this year, up almost, what, 52 odd %?
Yes, we own a bunch of them, so quite biased there. But the thing about BEL, I mean, it's done its it is a cyclical thing a little bit here, but the stocks go up typically, and then they crash. They really badly crash. And then come back and so on. So right now it's on a good uptrend. It's a momentum kind of a story here. But what's also happening is, of course, India is moving towards defense indigenization, which means that more and more orders are going domestic rather than getting imports. This is quite a dramatic change now from both the Ministry of Defense and overall. I think the country's administration has moved to saying, listen, we need local manufacturing of our defense products, both I guess from a cost perspective, because the dollar can change the cost quite dramatically, the exchange rate, if you import stuff. And second, from a security perspective, because if the country that you're getting your goods from decides for whatever reason that you should not be given some spare parts, then you can't run your aircraft and you can't run your, so this is a problem I think we are seeing as a potential situation that's been happening, let's say, either in Russia or in China. And we don't want to be in that position. So indigenization is what's causing perhaps a lot of these things to rise. BEL is the largest among all of them. So I think it's just taking the leadership role here. But a lot of good defense companies, both public and private, seem to be moving up tremendously, because the opportunity is 10x what it is right now.
Okay, all right. Deepak, request you to stay on with us with news that the markets are holding with solid gains of around 190 points odd. The Nifty Bank has been an underperformer, but that's getting its act together as well, up close around 300 points. Slip in a short break. We come back, we'll discuss a few more stocks with Deepak, and we'll also get in Mr. Pashupati Advani of Global Foray. He'll talk about markets, sectors he likes, and